Earlier this month, it was reported that Russia had defied expectations of a slowing economy, as it grew 4.9% year-on-year in the first quarter. I'm joined by Ivan Tchakarov, Chief Economist for Russia and CIS at Renaissance Capital, to discuss the growth of Russia's economy. Thank you for joining me today. Do you believe the Russian economy will continue to grow over the next year?
We think that was a very good performance, but we doubt that this will continue over the course of the year. The reason Russia posted such a strong economic performance in the first quarter was mainly because of the behavior of consumption. The Russian consumer has been spending very robustly. The Russian consumer has been borrowing also from the banks. Inflation has also been very low. So in real terms, the Russian consumer has felt very rich, and this feeling of richness has translated into robust spending. So once again, private consumption has supported the very good performance of GDP in the first quarter, and I think that the factors that were actually supporting this strong spending in the first quarter will gradually fade away over the course of the year, because inflation will pick up, because consumer borrowing will slow down, and because of the external shocks that we're seeing right now in the economy. So overall, for the year, we're seeing Russian GDP growing at about 3%, which I think, relative to the external backdrop, will still be a very commendable performance.
The Russian economy depends heavily on demand for oil. If Greece leaves the Eurozone, this may affect oil prices. Do you think Greece will exit the Eurozone, and what possible effects do you think would have on Russia and the demand for oil?
Certainly, we all know that Russia is an energy economy, depends a lot on oil. So far, even with the kind of fall in oil prices that we have seen, oil prices, Brent in particular, have remained above $100, which is lending useful support to the Russian economy. We have done some calculations here as to the possible macroeconomic effect on Russia from a possible Greece exit. For example, we estimate that if there were to be an orderly exit from Greece, the Russian economy could slow down to 2% this year and to 2.9% in 2013. However, if we were to observe a disorderly Greek exit, we could see a flat economic performance in 2012, around 0.1%, and very, very mild recession in 2013. As far as oil is concerned, if we were to see an orderly exit of Greece, we see the oil prices going to 100, Brent oil prices going to $100. If, however, there were to be a disorderly Greek exit, we see oil prices dropping 84 this year and 94 next year. So obviously significantly lower than the current levels, but certainly well above the 37 oil price levels that we saw back in 2008. So I think that even in the scenario of a disorderly Greek exit, the Russian economy will definitely do reasonably well. Again, a very mild recession next year, but far better than the 9 or 8% contraction that this economy experienced back in 2009.
On Thursday, Russian President Vladimir Putin called on the government to draw up plans to sell stakes in oil and gas giants Rosneft and Gazprom in 2013-2015. What are your thoughts on this and on Putin's initiatives to boost the economy?
Well, that is correct. The government has announced a number of initiatives, reform initiatives, I think including on privatization, as you mentioned, but also other areas, improving the performance of the stock market, making the domestic bond market clearable, which is actually something that foreign fixed income investors are very excited about. The key thing, however, is that we have heard these such ambitious plans before, and I think that foreign investors right now are looking for implementation. Implementation is the key word, and I think that it will be very interesting to watch how these words have turned into deeds. So the first 100 days of the government will be very important to watch, whether we're going to see any progress with the reform agenda. And if that is the case, I think it will be very positive for the country. But once again, I think key work here for us and for foreign investors is implementation. We'll be watching whether the government delivers on its promises.
And finally, how is the ruble performing at the moment? And what effects do you think the Greek exit from the Eurozone would have on the ruble?
Well, as you know, the ruble has depreciated over the last 2 weeks. Since the beginning of May, it has lost a little bit less than 10% versus the dollar. But in fact, if you compare the performance of the ruble relative to some other emerging markets or EMEA currency, in particular those in Central and Eastern Europe, in Turkey and South Africa, you can actually see that the ruble has performed relatively well. And I think that part of it is definitely related to the fact that, as you mentioned before, the oil prices still holding up above $100. Another thing to keep in mind is that we have seen over the last couple of years a very significant change in the way the central bank operates the exchange rate. Before 2008, 2009, we had a relatively fixed exchange rate. Since those times, the Russian central bank has moved correctly, in our view, to a much more flexible arrangement. We think this is good for the economy because as the world is facing shocks, we're seeing the ruble depreciates and actually supporting the economy. So we think it's good that Russia has a flexible exchange rate. Again, we haven't seen very significant deterioration in value. And I think that even if we were to see significant external shocks, the central bank still has a lot of reserves, more than $500, to prevent any excessive weakening and excessive volatility of the exchange rate. So again, I don't really see any chaotic developments, moderate depreciation, which we think, once again, is good from a macroeconomic point of view.
Okay, thank you very much for your thoughts on the Russian economy. Stay tuned to Dukascopy TV for more exclusive interviews like this. Goodbye for now.